When you're getting ready to underwrite a multifamily property, there are two main documents you need from the seller or the broker in order to perform a preliminary analysis. The first is the rent roll, and the second is the T12 or trailing 12, or sometimes called the P&L statement. In this video, I will be walking you through a sample rent roll, show you my process for analyzing rent roll, and how you can use the information in this document to assess the health of the property. Hey, what's going on? If you're new to the channel, welcome. My name is Manny. I'm an engineer turned pharmacist and now a multifamily investor. In this channel, I help busy professionals like you become savvy investors by taking complex multifamily analysis concepts and break it down into easily digestible content. Now let's take a look at a sample rent roll document. I have a rent roll file that I received from a broker a few days ago for a deal that I'm currently analyzing. So for this video, I'll be walking you through my process, highlighting some of the data that I look for and what information I try to extract from the rent roll to assess the health of this property. As part of this process, I'll be using the MSA Analyzer to simplify the analysis and put it in a format I can easily use to assess the health of the property. Going back to the rent roll data, column E, I blurred out the names of the tenants for privacy reasons. What is a rent roll document? So a rent roll document, like I mentioned, is one of the documents that you receive from the broker, and it provides a list of all the units at the property. It tells you the different unit types, whether they're 1 bedrooms, 2 bedrooms, 3 bedrooms. Sometimes it has certain codes, and you can follow up with a broker to find out what those codes are. For example, in this property, this 1104B, that may be a studio, or that may be a 1 bedroom. You may need to reach out to the broker to figure out what those codes are. The size of each of those unit types, the square feet for each of those unit types, the resident code. Typically for a lot of rent rolls, you have both the resident code as well as the tenant name. When I'm doing my analysis, I use the tenant name because if it's a deal that we want to move forward with, we want to know exactly which tenant lives in what unit, especially when we go for our due diligence. But once we start analyzing the rent roll, I'll get rid of this column for the time being. The tenant name, the rent rolls wouldn't come with this column grayed out. I grayed it out for right now for privacy reasons to block out the tenant's name, as this is a live rent roll for a deal that's currently on the market. The market rent. The market rent is the maximum rent the property manager at that property thinks that unit can potentially rent for. It's not the effective rent, which we'll look at in a little bit. The difference between the market rent and the effective rent is that the market rent tells you from the property manager's perspective the highest rent they can rent that unit type for. The effective rent is the contractual rent that tenant has signed to live in that unit. So you have a column for the market rent, and then the code charges. This code charges will have the different charges for rent, any auxiliary charges like trash, parking, pest control. This says insurance rent. That will be listed here. These rent rolls comes in different format. There are two main types for the most part I've come across, and I labeled them complex and simple. The complex rent rolls would typically be in this format where you have the unit ID for one tenant and you have multiple line items underneath that unit ID. Simple rent rolls, there will be one line designated for each tenant. Even with these auxiliary charges, they will all be on one line. Those are much more easier to analyze. But even with the complex rent roll, using the MSA Analyzer, you can significantly reduce the time it takes for you to analyze that data, as you would see in a little bit. So the amount for each of those charges, so for parking, pest control, trash, and this applies to all of the tenants living at that unit. Vacant units will just be blank. Any model unit will be blank as well. Any resident deposit. For your preliminary analysis, this is not a big deal, so you can just move this aside for now. But once you start doing your due diligence for deals that are penciling closer to the asking price, then these are things that you verify during your due diligence. Moving dates, sometimes you have a lease start date, lease expiration date. Those are key data points because you want to know how many tenants have expired leases and what are the current lease expirations for all the active leases. If you're taking over a property where you have a bunch of leases expiring in the winter time, which is the more difficult period to rent, those are things that you want to keep in mind. Again, that's a risk. You just want to come up with a game plan if you're to move forward with a property. And last but not least, the balance. Again, not significant for your preliminary analysis, but once you go into your due diligence, those are all things that you verify. Most rent rolls will have similar data, some more information, but you typically have the unique unit ID, the unit type, the unit size for each of those unit types, the tenant name, the market rent, the effective rent, the moving date. Sometimes the moving date will be the same as the lease start date. They may just have one. For rent rolls that just have a moving date without a lease start date, I just duplicate that column and make the moving date the lease start date as well. I'll show you that in a few minutes. And the lease expiration date. If you scroll all the way to the bottom, this is a pretty big property. If you scroll all the way to the bottom, typically they will have future residents. So these are residents that have expressed interest or plan on moving into a unit. For right now, they're not paying any rent. For your analysis, those residents do not matter at this particular time because the seller or the current owner is not collecting any rent from those tenants. When I'm doing my analysis, I get rid of that information. Anything below the last tenant that's occupying the unit, I delete this information. All this information I'll be able to extract once I run my analysis using the MSA Analyzer, as you would see in a few minutes. There's two ways to do this. You can go through the entire process analyzing this rent roll, trying to create a unit mix table. And what a unit mix table does, it takes this, 1,800 lines of data, breaks it down into the different unique unit types. And for each unit types, you want to be able to say, this is the size of that unit type, this is the average market rent for those unit type, and this is the average effective rent. It gives you an overview of the different unit types at the property and the average rents for each of those unit types. When I first started underwriting, I used to do a lot of this analysis manually, and it would take me hours to do. Now I just use the MSA Analyzer. It takes me less than 5 minutes to complete the process. I'm not going to walk you through how to use the MSA Analyzer. We have a bunch of tutorial videos on the YouTube page, MS Analytica. You can check it out, but I'm going to quickly do the analysis and highlight some of the key information that I get once I have my unit mix table. But this is the MSA Analyzer, the rent roll tab, and I'll be copying my data over there. What I do when I first receive these rent roll files, I keep the original data because I can always come back to that data if I need to make any changes. And once I have a duplicate of that information, I'm going to copy the information that I need over to my MSA Analyzer for the analysis. So I'll quickly go through this process. I don't need that information. Future tenant. Now I can copy my data over to the MSA Analyzer. Copy my rent roll data, go over to the MSA Analyzer, paste it as values only. This complex rent roll, which today's date is the 19th. The rent code for rent is rent. I'll just type in rent. Once I have that information, I can scroll to the right. The MSA Analyzer does all the analysis for me. And now I can start to analyze this rent roll and assess what's going on with the property. The first chart shows me the lease up table as well as the number of expired leases. This is based on the lease expiration date from that rent roll. So the lease expiration date or the lease end date. Based on today's date, there have been 10 leases that have expired. That's not significant. I've seen worse, but that's something that you want to follow if you were to move forward with the property. Another thing is the lease up table, or when the leases will be expiring. And this is important information you want to be mindful of, because when it comes to leasing, the summer months like May, June, those are the best leasing months. It's easier to find tenants during those months. A lot of people move during the summer, so it's a lot easier. During the winter months, it's more difficult to move. So if you have a lot of leases that are expiring in December, January, February months, That's something that you want to pay attention to. Again, in your preliminary analysis, you can make a note of that. You're not going to make any changes to it at this time, but it provides you with that information to just be mindful of. Also, you don't want a situation where a majority of your leases are all expiring in the same month. That's a risk that you want to be mindful of. As we can see on this one, it's well distributed. We don't have 1 month where there's a significant amount of, say, 50 or 60% of the lease is expiring. So that's good. I wouldn't be too concerned. Another thing that I use this table for is if we're doing a value add deal and we're projecting to renovate like 5 units a month, and I have a few months where just 2 leases will be coming up due. That's something that I'll pay attention to as well. Once the MSA Analyzer compiles the data, it creates this unit mix table. Let me just zoom in. I don't need that file anymore, so I can just zoom in. It creates this unit mix table based on the different unit types and the square footage. Any unit type that has a unique square footage will have its own line. And looking at this data, I can see that for this particular unit type, that's 600 square feet, there are 9 total units. All of those units are occupied. The average market rent for those 9 units is $1,250, and the average effective rent, that's the current lease rent what the tenants are currently paying, is $1,216. It's important to note that the market rent, that's what the property manager that's currently running that property thinks those units should be rented for. It does not necessarily mean that's what the market is willing to pay for it. The reason I say that is because sometimes you will receive rent roll where these market rents are much higher than the in-place rents or the effective rents, and it creates this large loss to lease. And the broker is telling you that you can capture this. Just keep in mind that market rent is what the seller or the current property manager thinks those units should be rented for. You still have to do your comp analysis, speak to your property manager in that market to determine what are the true market rents for each of those unit types. I can see the different unit types. I can tell there are 320 units for the property we just looked at. 10 of those units are vacant, 305 are occupied. We can see the gross potential rent. This is the maximum income you can collect if all those units were being leased at that market rent. This is the effective income, so that's what you actually collecting, so what the tenants are actually paying. Other information this MSA Analyzer will provide to you, the maximum effective rent for each of those unit types. So it looks like all of those unique unit types and say what's the maximum rent for each one of them. So there's 9 units of the 1104 A1U. Was the maximum rent that the tenants are paying for. It looks at the minimum rent as well as the maximum effective rent. And I have this metric here, which is the effective rent change. What this does is it looks at the different unit types that are of the same size, and it compares the rent between those unit types. And where this is useful is when you're analyzing rent rolls like this, where some of the units have been renovated. You may have a fully renovated, partially renovated, or classic unit. And they all have different designation for unit type, but the size of the units are the same. The analyzer is going to assess those 3 different levels of renovation, the classic, the partially renovated, and the fully renovated, and look at what's the rent difference. It helps you identify what's the potential premium if you were to take over this property and continue the value add that's in place. The green is showing the potential value add premium comparing the different unit types that are of the same size. You just have to follow up with a broker to determine what the different unit codes are. For some rent rolls is self-explanatory. It will tell you these are renovated, these are non-renovated. When they have codes like this, you can infer from the data that maybe some of those have been renovated, but just get clarification from the broker. Another area that I look for when I'm analyzing rent roll is looking at the most recent leases compared to, say, leases that were signed 6 months ago. As we are aware, when it comes to income with multifamily properties, they tend to be more forward-looking. Rents today for a lot of multifamily properties are significantly different than rents 12 months ago. And a lot of times when you're looking at this average effective rent, it doesn't tell you the whole story. because you don't know when those leases were signed. For example, in this particular unit type, what if those leases were signed 12 months ago? But now you're looking at the average rents 12 months ago. And if your business plan was dependent on this rent continuing, but you looked at recent rent, say like the last 3 months, there was a unit that rented for $11.55. Although the average effective rent for those units is $12.16, the most recent leases are actually getting lower rent. And that's important information, because what I typically see is I'll receive a property from a broker, and the broker will tell me you can take over this property and you can increase rents by 3%, 4%. But I'm looking at this data, I'm comparing the leases that were signed in the last 1 month to say 6 months, and the average in place leases for all of those units that are occupied. For example, this unit type, the average in place effective rents for all the unit types is $12.21, but the most recent lease is $11.95. How many leases were signed? 1 in the past 1 month, 3 in the past 3 months. I can see that even the most recent leases getting lower rent than the average. Probably a lot of those leases were signed a few months back. This is something that I would use to assess the trends in rent. Ideally, what I want to see is when I look at the most recent leases, it's much higher than the in-place average for the effective rent. Because if I look at the most recent leases, if we had a bunch of leases, it was like 1,500, and I'm looking at this average is only 1,447. That's telling, because I can see that rent has been increasing based on the recent leases. But if I'm comparing the in-place rent for the occupied units for each unit type to the most recent leases for that particular unit type, and I see a downtrend in rent, that's concerning. That's something that I would have to bake into my underwriting, maybe be more conservative on my future projections. Or if I was going to continue with that value add, maybe delay it a few months until the property can stabilize and then I resume value add. If I go into the unit mix table, the MSA Analyzer does a comprehensive breakdown of that rent roll into unit mix table. Earlier, I mentioned that when you look at the market rents, it tells you what the current property manager thinks those units should be rented for. But you have to do your own comp analysis. You have to do a comp analysis, look at the different properties in that area, look at what the studios are rented for, the one bedrooms that were rented for, what are the comparable properties based on amenities, the unit size, adjusting for all of that, and compare that to your property. Using that, you can come up with the market rents for each of those unit types. Take the information on the rent roll with a grain of salt, but you always want to do your own analysis. What are some other information that we can gather from the rent roll? Earlier, we looked at the total number of units that were vacant. So that's 15. If we go into the unit mix tab, 4.7% vacancy. That's pretty good. Again, is that a true vacancy, or is the owner just offering lower rent in order to fill up the units because they have to sell the property? Those are things that you have to assess as well. Just because the vacancy is low doesn't mean it's a highly desirable property. Maybe the owner is just offering lower rent to fill up the unit so they can sell it. Another thing we can get is the loss to lease. The loss to lease will tell you the difference between the effective rent and the market rent. The current average effective rent is $14.47 and the market rent is $14.6. So the loss to lease, that difference is 1.97. But this is based on the in-place market rent. From that rent roll data, you still want to do a comparable analysis and make adjustments to that market rent data. There's other information that you can gather from here. It tells you the dollar per square foot for the effective rent as well as the market rent, total number of units renovated. We haven't done any renovations to our renovations tab yet, so nothing on that. There's 320 units. Let's see, what other information can I gather from here? 15 units are vacant, which correlates to 4.7% vacancy. Using all of this information, you can go into your pro forma, start building your analysis, and if you need to do any renovation, some of that data will flow into the renovations tab, and you can use that as you plan your renovations. But the key things to pay attention to when it comes to the rent roll file for your preliminary analysis, it gives you good information about the health of the property. But keep in mind that information is at a snapshot in time. We received this rent roll earlier this month, the first week of February. If I was to get an updated rent roll, some of that information may have changed. because at the time there may have been 15 vacant units, but today maybe there are 20 vacant units. But you want to make sure as you progress in the analysis and vetting the property, you always want to get the most updated information, especially when it comes to the rent roll data as well as the T12 data, because that changes on a daily basis. To conclude, the rent roll is going to tell you all the different units at that property, the tenants that reside at that property, how much they're paying for each of those unit types, and what the property manager thinks those units should be going for. And using your market research, comparable analysis, what you're trying to find out if there's any potential to maybe a value add strategy or just burning the loss to lease to bring a lot of those units to market. If you found this information useful, go ahead and hit subscribe and hit the like button, and I'll see you on the next video.